I have been investing in VOO and QQQ for years, and it helped me build a strong foundation. But now I'm thinking ahead the next 10 years. In this video, I will show you how I am preparing my portfolio to keep growing through anything the market throws at us. Hi, this is Austin. Welcome to my channel. After years of investing in VOO and QQQ, I have learned one thing very clearly. You don't build wealth overnight, you build it by staying in the game long enough. These two ETFs helped me grow my first 150k, and now I am preparing for the next 10 years because if the past decade taught me patience, then the next decade is about preparation. So in this video, I want to share exactly how I am preparing my VOO and QQQ portfolio for the next 10 years, what I am keeping the same, what I am improving, and how I am making sure my investments keep working no matter what the market does. This isn't about predicting the future, it's about being ready for it. Before we talk about the next 10 years, let's take a quick look at what worked and what didn't in the last one. When I first started investing, I didn't know much. I was chasing trends, reacting to headlines, and trying to beat the market. Eventually, I realized the truth. No one beats the market by guessing. You win by owning it consistently. That's when I focused on just two ETFs, VOO, which tracks S&P 500, and QQQ, which represents the Nasdaq 100. VOO gave me stability, QQQ gave me growth, and together they gave me peace of mind. That combination worked incredibly well over the years. Even during market drops, I stayed invest and keep buying. And that's exactly why my portfolio grew. But now, I'm not just thinking about the next year, I'm thinking about the next decade. And that's me preparing differently, mentally, financially, and strategically. Here's the first thing I realized. The next 10 years won't look like the last 10. Market will rise, fall, and surprise us in ways we can predict. There will be new technologies, different interest rates, and global shifts that no one sees coming. But that doesn't scare me, because my plan isn't based on prediction, it's based on preparation. My 10-year philosophy is simple. Stay invested, stay consistent, stay calm. I'm not trying to guess where the next bull market will start. I'm building a system that works in any market. For me, that means focusing on things I can control. How much I can invest each month, how I react when price move, and how disciplined I stay with my process. If I do these three things well, the market will take care of the rest. Let's talk about how I am structuring my VOO and QQQ portfolio for the next 10 years. Right now, my setup is simple, 80% VOO and 20% QQQ. That balance feels right for me. VOO gives me broad exposure to the US economy, while QQQ gives me a strong focus on tech and innovation. Could I go heavier on QQQ for higher growth? Sure. But I have learned that stability is just as important as performance. Because the more stable your plan feels, the easier it is to stick with it long term. Here's how I am managing it. 1. Automatic contributions every month. No emotions, no guessing. My broker transfers at the fixed amount into VOO and QQQ automatically. 2. No selling. I'm not touching this for at least a decade. Every share I buy is meant to stay there and keep compounding. 3. Dividend reinvestment turned on. That way, every time I earn dividends, they buy more shares for me automatically. It's boring, I know. But boring is exactly what makes it work. This structure might not be flashy, but it's strong enough to handle any kind of market. Now, let's be honest, the next 10 years won't be smooth. There will be corrections, recessions, and times when everyone say, maybe this time is different. So I am preparing for that too. My approach is this. I expect volatility and I plan around it. I keep a small cash buffer equal to about 3 to 3 months for living expenses. That's not for investing, that's for peace of mind. Because when you know your bills are covered, you don't panic when the market drops. You keep buying. I also remind myself, volatility isn't danger, it's opportunity. When the market falls, my contribution buy more shares. and when it rises again, these extra shares compound faster. So instead of asking, when will it drop? I ask, am I ready to stay invest when it does? That's the real preparation. Over time, one ETF might grow faster than the other, and that's completely normal. If QQQ outperforms, my portfolio could drip to 50-50, or even 45-50 between VOO and QQQ. That's when I rebalance, but I don't do it emotionally, I do it strategically. Here's my rule. I check my allocation once a year. If it's off by more than 5%, I rebalance by buying more of one that's underweighted. For example, if QQQ grows fast and becomes 50% of my portfolio, I will direct my next few monthly contribution more toward VOO until it evens out again. No selling, no panic, just small adjustments. Let's keep my portfolio stable and aligned with my long-term goals without triggering taxes or overthinking. As I look at the next decade, I want both growth and resilience. VOO gives me exposure to solid, dividend-paying companies. QQQ gives me exposure to innovation, companies shaping the future. That combination means I don't need to chase yield or pick risky stocks. My income will grow naturally through dividends and price appreciation. And here's something I remind myself often. Growth without income feels risky. Income without growth feels slow. But together, they build freedom. That's why I will keep holding both ETFs for at least another 10 years, letting them balance each other. This is maybe the most important part, my mindset, because no strategy works if your emotions don't match it. Here's how I am preparing mentally for the next 10 years. 1. Accept boredom. Compounding looks slow before it looks powerful. I am okay with that. 2. Ignore short-term noises. I will keep my news intake limited, just enough to stay informed, not enough to get scared. 3. Trust the math. The longer I stay invested, the smaller short-term volatility becomes. 4. Think in decades, not days. I'm not chasing this year's best return. I'm chasing my 10-year outcome. This small mindset shift protect me from my own worst impulses. Because the truth is, investing success isn't just about picking the right ETFs. It's about becoming the kind of person who can hold them for 10 years without losing faith. Let's be real. The next decade will be full of surprise. New technologies, AI breakthroughs, inflation cycles, political shifts, and recessions. They will all come and go. But here's how I am preparing. I'm not building a portfolio that relies on prediction. I'm building one that survives changes. Because when you own VOO, you own the strongest companies in the US economy, the ones that adapt and evolve. And when you own QQQ, you own the innovators, the ones creating the future. So, no matter how the economy changes, I will always have exposure to both stability and innovation. That's not luck, that's design. Consistency builds results, but habit protects them. Here's how I plan to stay consistent for the next decade. 1. Monthly investing routine. I treat investing like a paying the bill, non-negotiable, automatic, and consistent. 2. Quarterly check-in. Once every 3 months, I spend about 10 minutes reviewing my contributions and dividends. Not performance, just consistency. 3. Annual reflection. Once a year, I review how I handle emotions, not just returns. Did I panic? Did I stay patient? That reflection helped me grow as an investor. 4. No comparison. I don't compare my results to others online because everyone's journey and timing are different. These small habits keep me grounded and focused, not distracted by short-term noises. At the end of the day, this plan isn't just about money, it's about freedom. My goal isn't to retire early or hit a certain number. It's to live a life where my finances don't control me. VOO and QQQ help me do that. They make my money grow quietly in the background, so I can focus on living. That's why I am not in a rush. I don't need to beat the market, I just need to stay in the market. Because over 10 years, consistency outperforms panic every single time. And when I reach the next milestone, whatever number it is, I will know it wasn't luck, it was preparation. So that's how I am preparing my VOO and QQQ portfolio for the next 10 years. It's not about getting the next big thing. It's about setting out a system that can grow through everything. My plan is simple. Keep investing, keep rebalancing, keep learning, and most importantly, keep waiting. Because the next decade will reward the patient, the disciplined, and the prepared. If you have been investing in VOO and QQQ too, I'd love to know, how are you preparing for the next 10 years? Let me know in the comments below. And if this video helped you, hit that like button and subscribe, because I will be sharing more about how I am planning to make this next decade and the most productive one yet. Thanks for watching, and remember, you don't need to predict the future, you just need to prepare it. I'm Austin, and see you next time.